Did you know that in 1971, an ounce of gold was worth just $35? Today, that same ounce is worth around $2,862. Imagine if you had invested back then. How much wealth would you have built? Or, let's take silver. Back in 2001, silver was trading at $4 an ounce. Fast forward to today, and it's hovering around $31 to $33 per ounce. That's more than a 700% increase. Let me ask you, what if your money could work for you instead of losing value? Have you noticed how prices keep going up while your money seems to buy less and less? Have you ever wondered why the wealthy continue to invest in gold and silver, no matter the economic climate? What if I told you that investing in these precious metals could protect your wealth and even grow it over time? Well, today, I'm going to break down exactly why investing in gold and silver is one of the best financial moves you can make. Stay with me because, by the end of this video, you'll know why gold and silver have always been valuable. How do they protect your money from inflation and economic crashes? Number 1. Historical significance of gold and silver. What if I told you that gold and silver have outlasted every single currency in human history? Think about it. How many times have paper currencies collapsed? The Roman denarius? Gone. The German mark? Worthless after hyperinflation. Even today, the US dollar has lost over 90% of its value in the last 100 years. But gold and silver? They have been valuable for over 5,000 years. Why? Because unlike paper money, they can't be printed out of thin air. Long before we had dollars, euros, or digital payments, gold and silver were the foundation of trade and commerce. Ancient Egyptians used gold to craft jewelry and even buried their pharaohs with it, believing it held eternal value. In the Roman Empire, silver coins were the standard currency. But when the government started mixing in cheaper metals, inflation skyrocketed and the empire collapsed. Sound familiar? What do you think would happen if our modern currencies lost all their value? Let's fast forward to more recent history. During World War II, when people feared for their savings, they turned to gold to protect their wealth. In 2008, when the stock market crashed, gold prices soared from $700 to over $1,800 in just a few years. Even today, when economies struggle, gold and silver remain a safe haven while stocks and paper money lose value. Here's something to think about. If gold and silver have survived wars, financial crashes, and even the fall of entire empires, don't you think they'll continue to hold value in the future? History has proven that currencies come and go, but gold and silver remain. So, the real question is, do you want to rely on paper money that keeps losing value? Or do you want to secure your wealth with something time-tested? Number 2. Hedge against inflation. Have you ever wondered why your grandparents could buy a full meal for just a few cents? But today, a simple burger costs $10 or more. Your money is secretly losing value every single year. And most people don't even realize it. That's called inflation, and it's one of the biggest threats to your wealth. But here's the good news. Gold and silver have protected people from inflation for centuries. Let's take an example. If you had $10,000 in the bank in 2000, that money could buy you a brand new car. Fast forward to today, that same $10,000 can barely buy you a used car with high mileage. Why? Because inflation eats away at your money's purchasing power. Now, let's compare that to gold. In 1971, when the US dollar was still tied to gold, an ounce of gold was $35. Today, that same ounce is worth over $2,000. If you had kept your savings in gold instead of cash, your wealth would have increased by over 5,000%. Unlike paper money, which governments can print endlessly, gold and silver are limited resources. The more money is printed, the less each dollar is worth. But gold, you can't just print more of it. That's why it holds its value. Take this example. In 1920, you could buy a high-quality suit with 1 ounce of gold. Today, you can still buy a high-quality suit with 1 ounce of gold. But if you had kept the same amount of money in cash instead, it would be worth almost nothing. In the 1970s, US inflation skyrocketed. Gold went from $35 to over $800 per ounce. That's more than 20 times its value. So, if you're worried about inflation making your savings worthless, Gold and silver could be your ultimate shield. Number 3. Safe haven during economic uncertainty. Your bank account isn't as safe as you think. Sounds crazy, right? Imagine waking up one day to find that the stock market has crashed. Banks are freezing withdrawals, and your hard-earned savings are suddenly worth a fraction of what they were yesterday. Well, it's happened before, and it can happen again. During the Great Depression, which lasted from 1929 to 1939, the stock market collapsed, banks shut down, and millions of people lost their life savings. But for those who held gold, their wealth remained intact because gold's value actually increased during the crisis. Uncertainty took over as global economies shut down during the 2020 pandemic crash. Investors panicked and rushed to buy gold and silver, causing prices to spike once again. If history has repeatedly proven that gold and silver thrive when everything else collapses, why would you not want them in your portfolio? When banks fail, gold and silver remain valuable because they're physical assets that no one can manipulate. Every time a currency collapses, gold and silver rise in value because people trust them more than paper money. Number 4. Limited supply and growing demand. Do you know that gold and silver are running out? That's right. While governments can print unlimited amounts of money, they can't print more gold or silver. And as supply shrinks, demand is skyrocketing. What happens when something becomes rare, but more and more people want it? The price goes up. And that's exactly what's happening with gold and silver right now. You might think there's an endless supply of gold and silver, but the reality is far different. Gold mining has slowed down significantly, and most of the easy-to-mine gold has already been extracted. Some experts predict that we could reach peak gold within the next few decades, meaning mining production will decline while demand keeps increasing. Silver is even more scarce because it is used in industries such as solar panels, electric cars, and medical technology. Not only is supply shrinking, but demand is reaching new highs. Countries like China, India, and Russia are buying record amounts of gold because they don't trust paper money. In 2023 alone, central banks bought more gold than ever before. Why? Because they know it's a safe asset that will always hold value. Silver isn't just for coins and jewelry. It's essential for solar panels, electric vehicles, and 5G networks. As the world moves toward green energy, silver demand is exploding. More people are realizing that fiat money is losing value, so they're turning to gold and silver. When more investors buy in, prices will only go higher. If something is rare but highly desired, its price naturally skyrockets over time. Gold and silver are already limited, but with demand rising, their value will likely keep increasing. Those who buy now are positioning themselves for massive gains in the future. Number 5. Portfolio diversification. Putting all your money into one investment, like stocks or real estate, is risky. What happens to your wealth if the stock market crashes tomorrow or the housing bubble bursts? It could be wiped out overnight. But here's what smart investors do. They diversify. They don't put all their eggs in one basket. And gold and silver play a key role in protecting and balancing their wealth. Imagine you have $100,000 invested in stocks, but then a major recession hits. The market crashes, and your portfolio loses 40% of its value. Suddenly, your $100,000 is now just $60,000. A massive loss. But what if you had 20 to 30% of that money in gold and silver? While stocks are crashing, gold and silver typically increase in value. Instead of losing everything, your portfolio remains stable and even gains value in uncertain times. In 2020, when markets crashed due to COVID-19, gold hit record highs while stocks suffered huge losses. Wouldn't you want an investment that balances your risk when the economy takes a hit? The world's wealthiest investors and financial experts always include gold and silver in their portfolios. Ray Dalio, a billionaire hedge fund manager, recommends holding at least 10% in gold. Warren Buffett invests in precious metals because they provide protection against economic downturns. Central banks across the world keep massive reserves of gold because they know it's a stable store of value. Stocks can crash overnight, but gold holds its value. Real estate can be illiquid and expensive, but silver is affordable and easy to trade. Having gold and silver in your portfolio means you're covered no matter what happens. The smartest investors don't take unnecessary risks. They diversify, and gold and silver are the ultimate tools for stability. Number 6. Tangible asset with no counterparty risk. Have you ever thought that most of your investments aren't really yours? Your stocks? They exist as digital numbers on a screen. If the brokerage fails, you could lose access to them. Your money in the bank? It's just an IOU from the bank. If the bank collapses, you might never see it again. But gold and silver? They're real. They're tangible. And no one can erase their value with the click of a button. Would you rather trust a bank's promise or hold something in your hands that has been valuable for thousands of years? Counterparty risk is the danger that someone on the other side of a transaction can fail you. If a company goes bankrupt, its stocks become worthless. If a bank collapses, your savings could disappear overnight. If a government prints too much money, your currency loses value. Gold and silver don't rely on anyone. They have value on their own, no matter what happens in the financial world. If the company you invest in fails, your stocks become worthless. Bonds depend on governments or corporations paying you back. If they default, you're left with nothing. Real estate is tangible, but you still depend on banks, tenants, and governments. During a crisis, you can't easily sell a house for cash. Gold and silver are physical assets. You own them outright. They don't require a bank or institution to hold their value. They're liquid. You can sell them anywhere, anytime. Central banks store tons of gold because they know it's the ultimate financial insurance. Investors like Robert Kiyosaki call gold and silver real money that holds value no matter what. Governments and banks own gold, but they don't want you to own it. They want you to be dependent on their system instead. Gold and silver don't need a bank, a government, or a contract to be valuable. They just are. So after everything we've covered, will you invest in gold and silver? Or will you sit on the sidelines while others protect their wealth? Gold and silver have been wealth preservers for centuries, and history shows they're a powerful hedge against economic turmoil. If you found this video valuable, don't forget to like it and share it with someone who needs to hear it. Subscribe to Blackboard Finance for more financial wisdom and wealth building tips. What topic should we cover next? Drop your suggestions below. Turn on notifications so you never miss an update. Thank you for watching, and I'll see you in the next video.